Welcome everyone to the Kendall Report, where I share my 44 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, I'm going to discuss something that's been on my mind. I've written about it a lot in my Substack, and I'm going to talk about the GDP numbers and even the employment numbers that we just recently got, and that big revision that we saw several weeks ago of 818,000. Let's get into tonight's video. Well, folks, the real question is, are the GDP numbers completely wrong? We've been celebrating strong economic growth, but overstatement throws a narrative into question. I've been talking about this, as I said in the Substack. The GDP calculations are heavily rely on employment data, estimate personal income, consumer spending. With the 818,000 fewer jobs than we thought, maybe we're looking at potential downward revisions in GDP. But we just got GDP released the other day, and it was like status quo. It's like finding out your bank account has less money than you thought. Our economic growth might not be as robust as we believed. It's starting to bring a lot of questions into the analysis and what the markets are likely to do. So let's talk about the unemployment rate that just came in. Somehow it came in and downticked. After 818,000 new lack of jobs that we thought were there, all of a sudden we've got an unemployment rate decline. How is that? Same agency that gives us job numbers somehow are reporting that employment rate is actually declining. It would appear to be another falsehood, potentially manipulation, and further errors delivered as valid data. This is just starting to really cause a real issue with the confidence in these numbers. I've said this before on Substack, is really what we're looking at is that the fact that the numbers that we see and the United States, we've always validated that these are great, accurate numbers, but that's not the case anymore. So the labor force participation rate, it continued to be stable. How is that? If there's fewer people working, how is it not a different number? And I just continue to question all of these numbers here. So this has got to ultimately change all the forecasts. Now, we're still seeing the market flow and other things happening from the standpoint of how the markets are acting, although last week was pretty ugly. I think we're down, we started down on Monday. We bounced a little bit, but basically a disaster as we came in to the end of the week. But I continue to suggest that it's almost like everybody's looking through things like these rose-colored glasses, and somehow these numbers are not altered. They're not even going through any measurement, any changes in the metrics at all. They should all be changed, and somehow they're not being changed. It just say, oh, we over-reported the jobs. Well, it gets really interesting from here. Counterintuitively, though, this statement might make wage growth look stronger per capita. That's if we're distributing the same total wages among fewer workers, then it appears that each worker is getting a bigger slice of the pie. But remember, this is not just a statistical quirk, but it's a real-world wage improvement. So this is why I continue to look at these numbers. The other factor, and I talk about them all the time, is the productivity numbers. They could get an unexpected boost because we're producing the same output with fewer workers than we thought. But wait a minute. I just said that is the numbers that we're seeing in GDP, are those real? If they're not, then all of these numbers are off. We're coming into a world with complete uncertainty for how to look at these measures. And I think this uncertainty can start to really kick up the volatility and other uncertainty with us coming into the election and other things that we have coming on just in a next, less than 70 days, I think it is. Let's talk about inflation a little bit. With fewer employed individuals, we're looking at potentially less upward pressure on wages and consumer spending. So how do we reconcile all of these differences that are starting to be questions? I don't have the answers for you in this video, but I do want to talk about some of the other things that I think is going to set up as we come into the Fed meeting next week. And this is going to be really interesting because the Fed has been in this hawkish stance. We've been doing QT, but they've kept rates artificially high for a while. So is this new information? Are they going to change and to pivot more to a dovish approach? That seems to be what the markets are thinking right now. But the overall expectation is been exactly what it's been for a while. These numbers, it doesn't appear that a lot of these numbers that are being talked about are really being broadly considered and what the uncertainty of this is. So this doesn't just affect monetary policy. Government might need to reassess a fiscal stance. If the economy isn't strong as we thought, well, we could see changes in government spending, tax policies, budget allocations. It's a domino effect that could reshape our economic strategy. So this is important to understand from my viewpoint of what these numbers are going to end up looking like and who's going to fix these agencies that are reporting this terrible data. If we have a weaker job market, it could also signal softer consumer demand, otherwise softening the economy. And it's really, I think, getting very dicey from that standpoint. It seems to be a self-fulfilling prophecy that further could impact economic growth. And let's not forget about consumer confidence. This is a key indicator that I track all the time. And the job market is huge. And I've talked about the stability in the labor market. Well, surprise, we all got fooled by these numbers. And everybody was operating off these numbers. And therefore, we're all kind of locked into trying to reassess what we looked at before. And it's very challenging, I find, to start to ask myself these questions, what is going to happen from here? So are the numbers we're seeing, is this going to potentially impact spending habits? Are we going to find out, it's like finding out the foundation on your home isn't as solid as you thought. It shakes your confidence in the whole structure of things. And this is what I've been going on about on the Substack as well. So as we come into this pre-week before the Fed, I think it's going to be interesting to watch how the stock market trades, especially consumer-dependent sectors might face pressure. We saw a lot of the chip stocks under pressure. We saw NVIDIA down like almost 14%. So it's imploding. All of the chip stocks are imploding. And so it's really causing a lot of change in the view of what demand is. We saw some downside in crude oil, looking close at some of these developments. And I think it's going to be hard to actually come up with a set, here's what's going to happen next, since now what we're doing is we're running in this world of we don't know what the numbers mean or if they're even accurate. I think this is undercutting of the reality of what the confidence in the markets. This also is going to affect the U.S. dollar. It could face some depreciation pressure, potentially affecting international trade dynamics. This goes on, folks. Our globalized economy, this statistical errors, one in this country could ripple across all borders. And perhaps maybe the most concerning is long impact on the trust in economic data, which I was alluding to a minute ago. This significant overstatement could erode confidence in official statistics, lending calls for reforms in how we collect and report the data. That's what I've been saying for a while, that I think it's a wake-up call for transparency and accuracy in our economic measurements. I mean, I don't even know what it's going to take at this time to actually come to some kind of conclusion on what we do. This is so systemic potentially that it ripples across, like I said, not just the U.S., but worldwide, and it's going to affect possible dollar exchange rates just as I went back in the beginning and the question was, is GDP calculations, are they all wrong? I think they are. I think they have to be adjusted. And if they're not adjusted, then that's just going to make it even worse as we go forward. It's kind of a stark reminder of how the complexities in measuring our economy, but a profound impact the data accuracy will have on policy decisions, market behaviors as we move forward. So folks, just hang on. Make sure you subscribe to my Substack because that's going to be important in getting all the microanalysis. I'll be talking about this and much more as we come into the Fed meeting next week. Thanks for watching. We'll talk to you very soon.